The silent death of the dollar. The dollar didn't explode. It didn't collapse in a single day. There were no riots at first. No emergency broadcasts. No panic in the streets. In fact, most people didn't even notice. Because the dollar didn't die loudly. It died quietly. In living rooms where groceries cost more each month. In boardrooms where CFOs made silent decisions. In central banks where purchases simply stopped. This is the story of how the world's most powerful currency became just another piece of paper. And how an empire learned that dominance, once lost, never returns. ACT 1. The Empire of PR Bretton Woods, New Hampshire. World War II is ending. Europe is in ruins. Asia is devastated. And in a luxury hotel in the mountains, 44 nations gather to decide the future of money. They create a new order. The dollar, backed by gold, becomes the world's reserve currency. Every other currency ties to the dollar. The dollar ties to gold. America holds 2/3 of the world's gold reserves. It's not just economic power. It's architectural control over global finance. For nearly 80 years, the US dollar was more than money. It was a promise. A guarantee. Oil was priced in it. Debt was written in it. Wars were funded with it. Entire nations lived under it. Want to buy oil from Saudi Arabia? Use dollars. Trade with Japan? Dollars. Borrow from international markets? Dollars. The dollar didn't just move the world. It controlled it. Then came 1971. Nixon closes the gold window. The dollar is no longer backed by gold. It's backed by something far more fragile: belief. Belief in American stability. American power. American promise. And for 50 years that belief held. Until it didn't. Act 2. The illusion of stability. By the early 2020s, everything looked normal on the surface. Markets still opened every morning at 9:30 Eastern. Banks still functioned. People still swiped cards and tapped phones. The machinery of capitalism hummed along, reliable as gravity. But beneath the routine, something was rotting. America's debt had crossed $30 trillion. Then 33. Then 35. Numbers so large they lost meaning. The 2008 financial crisis, trillions printed. The 2020 pandemic, trillions more. Each crisis met with the same solution. Create money, distribute it, worry about consequences later. Infrastructure crumbling while budgets balloon. Social programs expanding while revenue stagnates. Interest payments on the debt consuming larger slices of the federal budget each year. By 2025, the United States spent more on interest payments than on its entire military. Think about that. The world's dominant power spending more to service old debts than to project current strength. The dollar wasn't backed by gold anymore. It hadn't been for 50 years. It was backed by belief, by momentum, by the assumption that tomorrow would look like yesterday. And belief, unlike gold, can evaporate. But here's what most people missed. The real threat wasn't coming from Wall Street. It was coming from everywhere else. Act 3. The weaponization mistake. For decades, the dollar's dominance gave the United States an unmatched weapon: sanctions. Cut a country off from the dollar system and you cut it off from the world. Want to punish a regime? Freeze their dollar assets. Want to pressure a nation? Block their access to SWIFT, the dollar-based payment network. It was power without bombs. Coercion without invasion. But power, when used too often, teaches others how to escape it. Russia. Sanctioned repeatedly. China. Watching. Learning. Planning. Iran. Cut off for decades, forced to adapt. Venezuela. Frozen out of its own oil revenues. They didn't announce rebellion. They quietly built alternatives. Russia creates SPFS, its alternative to SWIFT. China develops CIPS, a yuan-based payment system. The BRICS nations discuss their own currency arrangements. Local currency trade deals multiply. Russia sells gas to China in yuan. India buys oil from Russia in rupees. At first, it seemed insignificant. A few billion here, a few billion there. It wasn't. Every bilateral deal was a crack in the foundation. Every alternative payment was a leak in the dam. The dollar's power came from being unavoidable. Universal. The only option. Once alternatives existed, the monopoly began dying. Central banks noticed. Quietly, without announcements, they began diversifying. Selling treasuries. Buying gold. Accumulating euros, yen, yuan. Not abandoning the dollar. Just hedging. And in finance, hedging is how confidence dies. Because once everyone is hedging against the same thing, that thing is already over. Act 4. The year everything shifted. To most Americans, it seemed like any other year. No stock market crash. No bank failures. No dramatic headlines. Instead, something far more dangerous occurred. Indifference. March 2027. A coalition of Middle Eastern oil producers finalizes long-term contracts with Asian buyers. The contracts are settled in a basket of currencies: yuan, rupees, dirhams. $0. The press coverage is minimal. Oil trades in multiple currencies all the time, right? But this was different. These weren't one-off deals. These were structural agreements. 20-year contracts. The petrodollar, the system that had sustained dollar dominance since the 1970s, was being quietly dismantled. June 2027. A U.S. Treasury auction for 10-year bonds misses its target. Not by much. Just enough to notice. Then it happens again. And again. China's purchases of U.S. Treasuries, declining. Japan's holdings, declining. Saudi Arabia, declining. They weren't dumping. That would be too obvious, too destabilizing. They were simply no longer accumulating. Federal Reserve officials insist everything is fine. The dollar remains strong. The economy is resilient. But in private meetings and classified briefings, panic is setting in. Because they can see what's coming. September 2027. Samsung announces it will accept payment in multiple currencies for its products. Apple follows. Then Mercedes. Then BP. Not instead of dollars. In addition to dollars. The language is careful. The message is clear. We no longer need to wait for dollar conversion. By December 2027, the dollar's share of global foreign exchange reserves has dropped to 52%. Still the largest. Still dominant. But no longer indispensable. And that's when the real psychological shift happened. The most terrifying realization hit global markets. The dollar was no longer essential. It was just convenient. And convenience can be replaced. Act 5. The moment trust cracked. Currencies don't fail because of inflation alone. They fail when people stop believing tomorrow will look like today. In 2027, trust didn't vanish overnight. It leaked. Corporations moved first. Cash reserves shifted from dollars into commodities. Gold, silver, lithium, rare earths. Not as investments. As insurance. Wealth fled into hard assets. Land. Energy infrastructure. Water rights. The ultra-rich understood what was coming before anyone else. They always do. Governments diversified reserves without public announcements. No need to panic the population. Sell 10 billion in treasuries. Buy 5 billion in gold. Move another 5 billion into euros. Slow, steady, silent. Even ordinary Americans felt it, though they couldn't name it. Groceries that cost $200 last year now cost $230. Then $260. Then $300. Rent increases that never reversed. Utility bills that climbed each season. Paychecks that arrived on time, cleared just fine, but somehow bought less each month. The numbers in your account stayed the same. But their meaning changed. Prices didn't spike suddenly. That would have caused panic, maybe political action. They never came back down. That caused something worse: resignation. Money still worked. You could still buy things, pay bills, save a little. But it no longer remembered its value. The dollar was suffering from dementia. It looked the same, sounded the same. But it had forgotten what it used to be. Act 6. The silent death. By the end of 2027, the dollar still existed. You could still spend it at any store in America. Banks still held it. Governments still printed it. Paychecks still came in it. But the world had moved on. Trade no longer revolved around it. Energy no longer bowed to it. Power no longer flowed from it. Financial centers in Shanghai, Mumbai, Dubai were processing transactions that never touched New York. Infrastructure projects funded in local currencies. Trade deals negotiated without dollar clauses. The global economy was reorganizing itself around a new reality: multipolarity. The dollar hadn't crashed. It had been replaced. Quietly. Politely. Irreversibly. This wasn't new. History has seen it before. The Dutch guilder ruled the 17th century. Then it didn't. The pound sterling dominated the 19th and early 20th centuries. Then it didn't. The French franc. The Spanish real. Every reserve currency in history followed the same path. Not with explosions, but with alternatives. Not with collapse, but with irrelevance. Empires don't fall when they're attacked. They fall when they're no longer needed. And that's the most painful lesson for any dominant power. You can't force people to need you. You can only be needed. Or not. The final truth. 2027 wasn't the year America collapsed. The city still stood. The military still operated. Democracy still functioned. It was simply the year America woke up in a world where it was no longer the center. Where decisions were made in capitals it didn't control. Where trade flowed through channels it didn't own. Where the future was being built without asking for permission. And the most dangerous part? Most people still think the dollar is alive. They see it working. They use it daily. They trust it completely. Because the quietest deaths are the hardest to accept. The dollar didn't die with a bang. It died with a whisper. And whispers are only heard by those who are listening. The greatest trick a dying empire ever pulled was convincing itself it was still alive.